gradually drawing to a close. It's November the 1st. Welcome to a brand new month and a brand new week of Business Morning. Good morning and thank you for joining us. I'm Chimeze Obi Iwago. Let's kick off with what's on the news this morning. The Central Bank of Nigeria has unveiled an operational framework to guide interested companies in participating in the 100 for 100 policy on production and productivity initiative. The framework, which was released on Sunday, shows the conditions interested companies must meet to qualify for the program. The governor of the Central Bank, Mr. Godwin Emefiele, had, during the launch of the e-Naira, announced plans to introduce a new financial instrument to boost local production and productivity in various sectors of the economy. Under this policy, the CBN would advertise, screen, scrutinize, and financially support 100 targeted private sector companies in 100 days. According to the governor, the instrument is expected to reverse Nigeria's over-reliance on imports. The PPP initiative will be anchored in the Development Finance Department of the Apex Bank under direct supervision of the CBN governor. And there are indications that the deposit money banks have started recovering debts owed by chronic debtors from their accounts in other banks to curb the growth of non-performing loans in the industry. Data from the Central Bank of Nigeria and the National Bureau of Statistics show that the NPLs in the banks recorded a slight decline from 1.2 trillion naira at the end of second quarter of 2020 to 1.1 trillion naira at the end of July 2021. This is despite an increase in the gross loans in the industry in the period. The CBN said the measures it introduced, such as the global standing instruction to reduce banking sector risks, was helping to reduce the NPLs in the sector. And on the global oil market, prices fell in early trade today after China said it released reserves of gasoline and diesel to boost supply, while investors unwound long positions ahead of an OPEC Plus meeting on November 4. China released reserves of the two fuels to increase market supply and support price stability in some regions. Brent crude futures dropped 20 cents to $83.52 a barrel after gaining 6 cents on Friday. U.S. West Texas Intermediate crude futures slid 37 cents to $83.20 a barrel, having risen 76 cents on Friday. Both benchmarks fell slightly last week, marking the first weekly drop in 8 weeks for Brent and the first decline in 10 weeks for WTI. All eyes are on the November 4 meeting of the Organization of Petroleum Exporting Countries, Russia and their allies, together called OPEC Plus, with analysts expecting them to stick to their plan to add 400,000 barrels per day of supply in December. And at the recently concluded annual meetings of the IMF and World Bank, the IMF noted there was imminent need for policymakers in Nigeria and other sub-Saharan African economies to tackle the pressing development spending needs, contain public debt, and mobilize tax revenues in order to achieve strong economic growth. At 3.7% this year, the recovery in sub-Saharan Africa is set to be the slowest in the world, with Nigeria expected to grow by 2.6% this year and 2.7% in 2022. How can policymakers in Nigeria navigate the increasingly difficult and complex policy environment? That's our conversation with Dr. Biodun Adedipe, Chief Consultant at B. Adedipe Associates, in a moment. Keep it here with us. This is Business Morning. All right, glad to have you on our show, Dr. Biodun Adedipe. Good morning. Thank you for joining us.
Thank you for having me. A very good morning to you.
Good morning. Well, tackling the pressing development spending needs, containing public debt, and mobilizing tax revenues is a trilemma. The IMF says policymakers in sub-Saharan Africa must deal with to achieve sustainable growth. But let's look at Nigeria in the midst of all of these. Nigeria's debt sustainability has been an issue of discussion recently, with the federal government maintaining that Nigeria's debt is still within a sustainable threshold, supporting the reason for continuous borrowing, but also says the challenge is with revenue. How do you tie this with what the IMF is saying?
Thank you so very much. Now, that really is the crux of the challenge of economic management in Nigeria. And it's not a recent phenomenon. I will take this back to about 11 years ago, And I was involved in a conversation on the presidential committee in October 2010. And the issue then was this tortuous relationship between our non-oil revenue and our recurrent spending. So the real challenge there is not so much as looking only at revenue, but what we do with the revenue. So the first point that we arrived at that committee was simply this, that as a government, the federal government of Nigeria needs to take a firm position in terms of a projected number of years when we want to equalize our non-oil revenue and recurrent spending. So if we do that, then we get out of the quagmire of our economy and, of course, federal government revenue always dependent on what we make from oil earnings. So that's the first thing I want to put out here. So we need to take a position on that and set for ourselves as a country, which means it doesn't matter which political party is in government, it doesn't matter who is the president, it is a national goal that we want to deliberately work towards. So now, that said, we then come back to this issue of tax revenue. Yes, in recent times, we've been all talking about revenue, that is non-revenue, tax revenue, GDP ratio, about 6%. Now, the government itself came out and said, we are projecting to get this to 15% in the next 5 years, all right? So if that now is the goal in terms of tax revenue ratio, the question is, where are the challenges? Why is it that tax revenue is not as high as it is supposed to be? Which in fact is the reform that IMF was pointing towards, that we need to do some reforms. And that means we must sit back and seriously address the gaps identified in our tax revenue, basket, let me put it that way. And there are a couple of issues, and I'm sure there are some of them you want me to also talk to. So but I think that is where the real conclusion is, tax reforms.
Now, when we talk about, you talk about government now shifting grounds and, looking back to address this challenge. As an economist who has been monitoring the trend in this economy, what should the government put as a priority as it is now?
All right, thank you very much for that. Now, I will make reference to two things. That number one, if the tax system is well designed, and that is the focus of reforms that the IMF is advising us to do, it should minimize the efficiency losses that are imposed by taxes, all right? So now, for that to happen, it means we must recognize where the inefficiencies are. Where are the leakages? Now, the way we also structure the tax system, does it motivate compliance? Does it also leave room for abuses on both sides of the divide? That is by the taxpayer and also by the administrator. That's the agency and its own operatives that actually go after the taxpayers to collect the money. So that means if there are efficiencies there, one thing we must put forward, and I've always advocated this, is that as much as possible, whatever we can automate in that process should not only be automated, not talking about it as we do now, but real automation, which means you minimize the scope for human intervention. But we've had cases where certain aspects of tax collection were automated, but they were not allowed to function. We get the taxpayer that should have done everything online still has to have an encounter with somebody in the office of the tax authorities. So we shouldn't be. Now, that is where the problem of leakages starts from. Then we've also had reports of instances where tax consultants are engaged, and when they go to the taxpayer's office or wherever they meet the taxpayer, what they do deliberately, and I want the government to take this very seriously because it's a reality. If we want to grow tax revenue, they deliberately put a very high tax bill before the taxpayer, which is far beyond what is statutorily expected to be paid, so that they can force the hand of the taxpayer to sit at the table and negotiate. What will you give to the tax consultant? What goes into government coffers? of course, unfortunately, operatives of the tax authorities do the same thing. So in which case, leakages is beyond the use of the money. Now, the other side to it is any tax system that does not focus on creating public goods, and this is coming out of research of many decades all over the world, talking about the global tax system. So it's not peculiar to Nigeria. Wherever the tax system generates revenue and it is not used to create public good, also eventually results in leakages and inefficiency. So in which case then, the focus should be where are the leakages, how to address them. So and of course, going beyond that also, a large informal sector, which typically is associated with lower productivity, of course, reduced tax revenues and even greater poverty and inequality. How do we bring them into the tax system? And I will recommend something here very quickly this morning. Now, we saw this happen in Lagos State when Fashola was governor of the state. How did this happen? The Lagos State government introduced what they call the minimum tax. And they made it very clear, we don't run after anybody to pay tax, but there are certain services you require from the government. When you come for such services, we request from you to show evidence of tax compliance. So if you don't have such evidence, it means you have to go to pay at least the minimum tax to start with, and immediately you pay that, you will be sunk into the tax basket. In which case, from then on, you will now be paying tax anyway. But the interesting thing there is issue a tax certificate. That TCC will not also cost. So we pay that minimum tax for 3 years. And that's the way this thing will work. So if you do that, the large informal sector in Nigeria, quickly estimate, accounts for about 48% of our GDP, will naturally be brought into the tax basket. So this is the way it works. So if you do that, of course, we've tried also giving a kind of forbearance to those who did not pay tax in previous years. But that has looked only at the big ones that pay a lot. There are the smaller ones that we can still bring into the tax bracket. And so all of these will ensure that that tax basket grows. And like the IMF and World Bank also recommended in this thing, it's not about increasing the tax rate. And some of us have argued this over many years. It is not about increasing the tax rate, which means you are taxing more those that are already in the tax basket. It's about expanding that basket, getting more corporate entities and individuals into the basket so that you can swell the revenue. So that is the way it goes. And then the other one that I mentioned, creating public goods, which is a global phenomenon, is what do we do with the tax money? The moment government approaches the expenditure side,
Oh, I guess we've lost Dr. Adedipe there. But while we try to connect back to Dr. Adedipe, making a point there, talking about the need for the federal government to actually design a better tax system to minimize leakages and optimize efficiency in tax collection there, which are part of the recommendation at the just concluded IMF World Bank annual meeting. Well, I think Dr. Adedipe is back now. Well, Dr. Adedipe, yes, you are advocating the need for us to actually design a better and workable tax system. Recently, of course, there's this issue of who collects the VAT. Should it be the state? Should it be the federal government? I mean, these are all the issues that we are talking about here in increasing our revenue. What's your take on that?
Well, I will just make 2 quick points on that. The first is for us to revert to the origin of VAT. That is, when we introduced VAT in Nigeria, what was the position then before that came on the scene? And what were those things we redefined as items that are vatable? Was there any particular type of tax that we dropped and now replaced with VAT? So with that sense of history, we know what VAT represents, and then we can now begin to look at how should that revenue be treated. Now, going beyond that also, we then go to the other side of it. And I'll say, even after the money comes in into the federal allocation account, how do we share the revenue? We've also talked about this over the years, that insofar as the center is so strong, number one, politically, everybody will be gunning for the center. Unfortunately, the center is distant somewhat from the grassroots. So it then means two things must be interrogated here. One is the origin of VAT that gives us a pointer as to where that should go and how it should be treated. The other one now, we talk about how we allocate revenue. Which case, do we now change the revenue allocation formula to ensure more of it goes to the states and local governments that are closer to the people? And again, that will probably also require us to look at our constitution again in terms of what the governments are responsible for, the central, the subnational. So all of these have to come into effect. That's why it is called reforms. So we must ensure that we go beyond the politics of it. Yes, politics is key. It drives a lot of things in the nation. But at the end of the day, it's the economy that affects people's lives. Politics doesn't affect them directly, the economics affects them. Because it is all about how do we make money? How do we take care of our needs? And then how do we also create and build wealth? In process of creating wealth, we want to also create jobs. So those must be the central issues. Not just raising revenue for the sake of raising revenue, but how will this also drive economic growth? And that's a one thing I want to also mention, the IMF mentioned, and that is, it is not about reforming the tax revenue in such a way that it becomes a disincentive to new investments. I think I must also mention that.
Absolutely. And of course, the issue of rising public debt is what the IMF is also calling that governments should actually watch. Now, let's look at the issue of debt to GDP. The DMO says Nigeria's debt to GDP is at 21.9%. That was in the second quarter of this year. However, according to the IMF Fiscal Monitor report, Nigeria's debt to GDP was at 35% as at 2020, and it's projected to rise to 35.7% this year and 42% in 2026. What's your take?
Well, I doubt the ratio quoted by the IMF. And I say that with every sense of responsibility, because we see the same data that they see. They obtain the data from us. So how they arrive at 35%, I want to know. Because we know the GDP figure of Nigeria, and we know the debt stock of Nigeria. So it's a different thing entirely if we are talking about revenue to debt servicing ratio. That's a different thing entirely. So the question of sovereign debt is very straightforward. If government must borrow any single naira or dollar, and people often think sovereign debt is all about the foreign loans. There's also the domestic debt, all right? But my own position is that if we must borrow at all, it should be tied to projects. And then more importantly, and that connects to the subject of today, is to ensure that with Nigeria receives value for money, which means it's not just about borrowing for projects. That's a good start to it, that we don't borrow for any other purpose than projects. But those projects also, we must have them delivered at value for money. And that's why it is also important that we can actually move away from this controversy by adopting the public-private partnership model of infrastructure delivery. That will save the government the headache of being reminded over and over again that you are borrowing too much. And at the same time, we can achieve the issue of cost efficiency in delivery of infrastructure.
We do appreciate your time this morning, Dr. Adedipe. Thank you very much for being on the show, and do have a great day.
Thank you for having me. We enjoy your day.
And as Nigeria seeks to achieve economic growth and sustainability, what role can the capital market play? That's our conversation after the break. The Well, capital market as a catalyst for economic development and sustainable growth. That's the theme of this year's annual conference of the Chartered Institute of Stockbrokers held in Lagos last week. Participants looked at ways by which the federal government could finance infrastructure through mobilization of medium and long-term funds from the capital market. Let's look at the talks around this. Ayodeji Ebo, Head Retail Investment at Chapel Hill, Durham. Thank you very much, Mr. Abel, for joining us. Good morning.
Good morning, and thanks for having me.
Yeah, so the stockbrokers just concluded its flagship annual conference with the theme Capital Market as Catalyst for Economic Development and Sustainable Growth. Why is this theme apt at this time?
Thank you, and we thank God for a very successful conference. And if you also, coincidentally, if you look at the theme of the 2022 budget, which speaks to economic growth and sustainability. So part of what has informed this is that beyond just growing, beyond just developing our economy, we need to be able to build capacity in terms of sustainability that will not be susceptible to oil price fluctuations. And we believe that the capital market that provides long-term capital will be able to help support this. When you look at the banks, most of the fundings are, I would say, medium term. They hardly provide very long-term capital, which a lot of businesses, for them to be able to build a sustainable business, you will require long-term capital and at a very reasonable rate.
Now, you were the co-chairman for this year's conference. What do you think is the significance of this conference to the stockbroking community?
Okay, very interesting. And when we look at the plenary sessions that where we're able to dive or discuss a lot of the topical issues that we believe that will be of benefit to stockbrokers, we looked at the opportunities. The first one, looking at the opportunities in the recently passed Petroleum Industry Act, where the capital market can provide support. You know, we're expecting that the NNPC Limited will be listed, and that will also provide an opportunity for funding long-term capital. We would also expect that as more businesses take advantage of the PIA, they may require capital for support to grow their business. Also, another very interesting session was around the small, medium enterprises. And we discovered that capital, which is also a major problem, but beyond capital, most of the businesses are not also prepared to access the capital. Yes, there may be concern around in terms of the requirements, but for some of the speakers that have been dealing with SMEs, some of them are taking that initiative to also try to prepare businesses to receive capital, to receive new investment, which we believe that capital market can also play a role in that. We also looked at fintech, which we know the evolution of fintech within the capital market, how the capital market can also provide support or collaboration in this regard. We believe that listing of some of these fintech companies, and you look at the dynamics of a lot of the fintech, they don't make money immediately. It's always long term. And when you see even for the NASDAQ, some of the international stock market, you see investors still buy into companies based on their projected revenue. They may still be declaring a loss. So we believe that we also need that reorientation, that investors shouldn't look at just companies that are declaring dividend alone, but you can buy with a potential profit in the future. And to just wrap it up, one very interesting topic that would also be very interesting to even investors is we looked at, there was a roundtable, stockbrokers roundtable around unclaimed dividend. How can we streamline the processes? How can we reduce the amount of unclaimed dividend? And this was really very discussed. And we believe that we're going to publish a communique surrounding the recommendations that will provide more details than some of the things I've said.
All right. Looking at some of these plenary sessions being discussed, you did mention the SMEs. What for you stood out in this plenary session?
Okay, thank you. So part of what we discovered is that there is sufficient, that we have sufficient capital, but most businesses, based on the criteria, which I won't say it's overboard, are not really positioned for that. So putting this into perspective, you have people running businesses and they don't keep records of what you sell, and even to know what your margin is. When you ask questions like, what's your profit? Most people look at the turnover and they are not prepared. Also looking at in terms of capacity, have they built enough capacity in terms of running a business? And that is why we also discovered that collaboration will also play a major role. You may have the vision, you may have the skill, but you can collaborate with those that also have the skills so that you build a strong business. And we also look at something very interesting, which was around the SMEs, which is focused on women. So we discovered that there are a lot of funds and capital that have been specifically targeted or targeting women women in business rather. So that is also very encouraging, and we believe that the capital in itself is not the only requirement that SMEs should always focus on. They should look beyond even the capital, building that capacity, building that that trend, and being able to meet those requirements from the day they set up.
Now, on the issue of the PIA Act, which of course the conference x-rayed, looking at the opportunities for the capital market, what should the stakeholders in the oil and gas sector be looking out for in the capital market?
Okay, thanks. If you look at currently the listed companies, we have only, I think, our two upstream companies listed on the Nigerian exchange, NGX, Seplat and the Forte Oil, which is also has a bit of upstream. But I would say Seplat is like the main upstream company that is listed on the Nigerian Stock Exchange. We believe that there are a lot of more companies that can take advantage of this. A lot of them are profitable, and to create visibility, to also be able to access long-term capital, that the capital market can provide that long-term capital in form of equities. And it creates a bit of stability. You know, when you go for debt, you are obliged to keep to the interest expense element, to paying the debt holders rather. So, but if you raise capital, you're able to also be able to retain and be able to balance and compensate equity shareholders. So we believe that the PIA would help solve that. You know, part of what is in the PIA is that there will be the regulation and removal of subsidies. So that will create a level playing ground for players within that market. And that will also create a major market. The capital market can provide that funding maybe in form of debt or in form of equity to support those businesses. Once we believe that there's clarity, once the investors see that there's more clarity and there's a level playing ground in this particular sector. You look at the books of the banks, about 30% of their total lending goes into the oil and gas sector. So we believe strongly that there's still a lot of opportunities within the oil and gas sector. Yes, there's a lot of discussion around renewables, but the reality is that renewable now cannot power industrialization. if we need to industrialize our economy, we will still use fossil form of energy to support that. And you can also look at that across the world. So we believe there's still opportunity within the oil and gas sector.
On the issue of the roundtable on the unclaimed dividend, I know that have become some kind of issue for investors. So going forward, what should investors be expecting? I mean, coming from this conversation of unclaimed dividend.
Okay, thanks. And for that particular session, it was very interesting to even have the Director General of the Securities and Exchange Commission seated, and we believe that some of the recommendation discussions have been taken, and I will just state some. Part of what was proposed within that roundtable is to even have a seamless electronic form. So once new investors come into the market and you are opening a new stock account, you don't need to mandate or fill any form to get your dividend, because the same requirements that you will need for the onboarding process is also what is needed to access your dividend. Secondly, they spoke about standardizing the forms that is being completed across all registrars, because we discovered that the requirement vary across registrars. So we believe if this is also done for those that still have unclaimed dividend, would also help. And lastly, there are a lot of other suggestions. Lastly, around that is that for the government should also note, looking at the last Finance Act, that Finance 2020 Finance Act, the government stated that for dividend that have been above, I think, 10 years, would be borrowed by the government. But the interest rate was also not stated. So the representative of the shareholders emphasized this, that government needs to review its position regarding this, because these funds are for shareholders and interest are paid when they come to the market to raise funds. So the interest should also be known and should be very attractive, pending when investors come to claim their dividends.
Now, you did mention that also part of the conversation centered on how fintechs can actually access funding through the capital market. What's the consensus there?
Okay, thanks. I think the major points, I think recurring point is that also came out of that is that the payment process is also critical to fintech, creating a very strong payment platform. So would really help a lot of the fintech to grow their businesses. And that will also provide a bit of confidence for potential investors. And around assessing capital in the stock market. So what what was discussed is that believe that the exchange can create or can review what we have the growth board, where companies that don't have as much requirement as the main board are listed. Most of these fintech companies can fit into that, and they will also be able to access long-term capital. But we need a lot of investor education, that people would see that potential. They will be willing to invest in those companies that are starting now with the potential of making money in the future, like we see in other climes.
All right, thank you very much, Ayodeji. We do appreciate your time and sharing those conversations you had at the conference last week with us. Thank you very much for your time.
Always my pleasure. Thanks for having me.
Right. Okay, let's do an opening call to the market. We have Anete there. Hey, Anete, good morning. Well, more gains in the equities market, but first, bring us up to speed with what's happening in the FX market.
Yes, good morning, Jimmy. Just like you rightly said, the equities market was as a matter of fact, on a bullish steroid for the month of October. Of course, we've entered a new month. But before we get there, let's take a look at the FX market. Total turnover there was up by 69.4%. Of course, that's in terms of the total turnover. But when you take a look at the spots market, it was down by 1.77%. Of course, no transaction was at the investors and exporters window of the forex market. But when we take a look at the Naira's performance at the NAFEX, it was down by 0.74% at 460 Naira 48 kobo against the previous level of 413 Naira 43 kobo. Now, to give us an insight into the forex market, of course, we will be taking a look at the fixed income market, where it was bullish there, of course, and also at the Treasury bills market, not much of activity, 6 deals there. The central banks, the open market operations, not much of activity, as well as the central bank's special bills, not much of activity there. But let's just go to Bosun Obembe, who's a fixed income trader at Access Bank. Thank you for joining us, Bosun.
Good morning. Thank you for having me.
Okay, so now can you bring us up to speed with what's happening at the fixed income market, especially when there wasn't much of activity last week, but what's going on currently?
Last week there was an NTB auction where about 235 billion was sold. So what mature was 150 billion. So we saw the stop rate declining by 26 basis points on the long end, while on the short and the mid end of the curve we had rate at 2.5 and 3.5%. Because of the FX auction on Friday and the CRR debit into the system, so there were a lot of there are not so much liquidity in the systems. So as a result of this, we saw market is quite quiet, but as we are expecting inflow into the system this week, about 438 billion. So we expect the market to be bullish this week.
Okay, so now when you mention the fact, we're also expecting an inflow of about 103.80 billion naira, from the OMO, open market operations, and that is expected to have some impact at the Treasury bills market. So what's your view about that?
If you look at the trend, CBN are actually not been selling the total that mature into the system. So last week, only 19 billion was sold. So I don't expect this to have any impact on the TB space. The only impact that will have is to actually ease the illiquidity in the money market. If you look at money market on Friday, it closed at 18% and 18.5 for OBB and overnight. So I expect by the time the money comes in tomorrow, there will be money in the system to actually enable a rate to actually come down to maybe 15-14% level. So market will still be a bit quiet on the TB space. The rate is quite low. Not much activity on the long and the mid. We are just seeing a few activity on the long end of the curve.
Okay, so thank you for that, for bringing us up to speed with the forex market and the fixed income market. Okay, so now we move over to the equities market, where October happened to be one of the best, if not the best month for equity investors there. It was 969, almost 970 billion naira gained in the entire month, and then 144 billion naira was gained in just 1 week, last week, in the final week of October. Take a look at it, 0.66%, and then of course in terms of month-to-date gain, we're at 4.5%. Year-to-date, we're 4.4%. And then, of course, when you take a look at the sectoral performance, green arrows across board. Of course, it's more like the call of Nigeria's Independence Day was a national day, so you just call it a national call of performance for the equities market. Then, of course, when you take at the volume, it's all green arrows. So that's why I said it's the best month for the equities market in the month of October. Now let's move over to the unlisted securities market. Not much of activity there. Of course, it was downbeat in terms of performance. The NSI index was down by 0.67%. Of course, we lost about 55 million naira in that small securities market. Then take a look at the volume of transactions there, 1.95 million at 121 million naira in 65 deals. Both the deals and the value were up, but the volume was down. So we would be looking at how the new month turns out for investors at this market as well as other markets. Of course, there's a positive outlook for the equities market where, you know, they expect that, yes, at some point, the latest earnings result would have an impact on, you know, investors' sentiments there. But at the tail end, we still expect some profit taking, especially from those who had put in, they bought the shares at some lower price, so they will be taking advantage of the price gains in some of the equities on the NGX. So that's it for the market. At least we will still be looking out for the performance at the close of Monday's trading session, which is the first day for November for trading at the markets.
And of course, we're looking out for green, white, green again, the national color, hoping that the bulls will continue to take the shine.
Yeah, you can't really tell. The market has its mind of its own.
I understand that, but we can only hope for the best, isn't it?
Yes, of course.
Okay, thanks, Aniti. We take another quick break, and when we come back, we do an opening call to London. Just stay with us. All right, let's cross over now to London, where Juliana will be giving us up to date on some of the developments out there. Hey, Juliana, good morning. Good to see you. A beautiful new month and new week. All right, Juliana. Well, one of the major outcomes of the G20 summit is the agreement on historic corporate tax deal. How do you see this shaping conversation at the ongoing climate change summit in Glasgow? UK Prime Minister Boris Johnson had described climate change as the biggest threat to humanity.
Yeah, absolutely. I believe the G20 summit over the weekend was a good stepping stone to COP26, albeit muted. I think the biggest headline, obviously, coming from the weekend is what you said, the global minimum tax of 15%, which has been agreed in principle by the 20 most industrialized nations in the world. This 15% tax, which I believe is due to come into effect in 2023, will stop multinational firms from finding homes across the world where they can basically pay less tax in those jurisdictions. This affects the big tech companies, Meta being one of them, alongside Alphabet, Microsoft, Apple, and all of the other ones. Lots of talk during the weekend was obviously focused on climate. I believe of the 20 most industrialized nations, only 12 have thus far committed to reaching net zero emissions by 2050. And really, I think that's the conversation going into COP. Lots of world leaders have already arrived in Glasgow, which is in Scotland, part of the United Kingdom. It is being led by the British government, Boris Johnson. Well, a lot of people don't know, it's actually co-hosted by the Italians. I believe about 120 world leaders are expected to be in attendance, but some big names are missing. I suppose the biggest is Xi Jinping, the Chinese leader. He hasn't been out of China for over 2 years. Some say this is down to COVID, others say because of internal politics affecting that region. But it's important he's there, of course, because China, as of present, is the world's biggest emitter of carbon. So they are expecting some sort of ambitious pledges from him, but he's not there. There is a big contingency, and, you know, it goes on. We're expecting the open plenary sessions to start at about midday. And again, we are expecting some ambitious pledges. I think Prime Minister Boris Johnson has said, you know, it's 5 minutes to 12, 12 being doomsday. So world leaders have got to do whatever they can to stop the world getting to that 2 degrees, which is a point, I believe they're saying, of a no return. But of course, we'll be keeping you updated, Chimeze, with all the happenings around COP26 this week.
Absolutely. Well, it's the beginning of a new month aside from the climate change summit. How has the market streets welcomed November, and how would things play out this week?
Yeah, goodness me. It's November the 1st already. It's gone so quickly this year. We're already in 2022. But the start of the week has been good in London. The blue chip index has started off in positive territory. Got a couple of big hitters this week. I suppose the biggest, obviously, is COP. Second to that is the Bank of England Monetary Policy Committee gathering, which is taking place on Thursday. This is where they're going to set out interest rates. A lot of people are going to be scanning through the minutes because we know that inflation is a major topic of concern, particularly here in the UK. Currently stands at about 3.1%. The government's, the Bank of England's target is 2%. It has been known to be transitionary. That's what all central bankers across the world are saying. But if you add on the rapid surge in wholesale gas prices, it is massive cause for concern. We're not expecting interest rates to rise on Thursday, but certainly they could be rising at the next gathering in December. So we'll have lots of updates in the minutes. Lots of people will be taking notice of that. And we are going to start getting PMI data out, I believe, starting today, having a forensic look at the private sector, manufacturing, services and construction within the UK's economy, which has had a bumpy recovery. So yes, the markets will be taking a keen eye on that data when it's due in later today, Chime.
Well, I guess we have quite a lot to chew this week, and I'm sure you have more update for us later in the day on Business Incorporated.
Thank you.
Okay, it's time to talk crypto. And here we have Ladi. So good to have you back, Ladi. I hope you did enjoy your holiday. And where is Bitcoin heading to this week, this month?
Well, it's October was a very bullish month for Bitcoin and cryptocurrencies. When I left here, Bitcoin was trading about $40,000. But today, we have Bitcoin trading at 64,000, doing really well. Market cap, $2.53 trillion. It's down about 1.24%. 24-hour volume, $132.12 billion traded in the total crypto market. You know, Bitcoin dominance still at 44%, looking good all through the market. Price of Bitcoin this morning is $60,326. 24-hour volume traded in Bitcoin, $32.57 billion. So we see Bitcoin trying to stay above the 60K range. Some traders are seeing it going below the 60K range at this point because it's had a really bullish month in October with a good start in November here with price of Ethereum, $4,207. It's down 2.43%. And 24-hour volume traded in Ethereum this morning, $17.61 billion. And we have top walls of market cap there. We see BNB there trading at $515, down 2.01%. So it's a mixed look now in the market. We have some greens and reds. Solana there, the only top coin there, up 6.47%. Let's bring in Olumide Adesina now, financial market analyst, to bring us up to speed. Good morning, Olumide. Great to have you.
Yeah, good morning, Ladi. Welcome back. Yeah.
Thank you so much, Olumide. So we see it seems Bitcoin and cryptocurrencies, you know, we've seen a boom of interest, you know, with Nigerians. What do you think is the appeal here?
Yeah, in simple terms, you don't need to be surprised because there are so many parabolics happening around the Nigerian crypto ecosystem. First of all, you need to understand that COVID-19 disrupted the economy at unprecedented level. And though we're just recovering from recession, the crypto market played a significant role among young Nigerians. So a lot of people saw opportunities in preserving their wealth, earning capacity increased, job employment across that sector also increased. And that is why we're seeing that Nigeria happens to be the only country in the world with a Bitcoin perfect score of 100%, telling you that the interest in Africa's biggest economy is unprecedented. And also, people need to understand that the banking infrastructure in Nigeria, though it's kind of sophisticated in Lagos, it's not the same in other states. So many citizens in other states see the crypto asset as an alternative to carry transactions. And that was why the Apex Bank, in its wisdom, felt the need to bring in the inner to further add into financial inclusion. But having said that, Nigerians still increasingly use these assets to also preserve wealth. You need to understand that the local currency has at some point, depending if you look at the last 2-3 years, it has depreciated by more than 30%, and that's kind of significant to a country where the minimum purchasing power is between 100 and 150,000 naira a month. So the crypto market was a better alternative for people to earn the foreign exchange, and
even though it's a very risky market.
Interest in the crypto market.
Even though it's a very risky market we have.
Yeah, exactly.
All right, so it's a new month. October was quite bullish for Bitcoin and altcoins, and we've had meme coins still the shine in October. What do you see happening in November?
For meme coins, I think the momentum is with Shiba Inu. This is a coin that in the past year has risen by 60 million%. That is kind of exploding. And the criteria is based on 3 metrics. First, they burnt about 40% of the supply. Also, you need to also consider the fact that they have a very strong crypto community. So I think Shiba Inu is the coin to watch. And recent report that shows that Robinhood might list it, might trigger more upside. So that's an interesting coin. But apart from that, I think the NFT-based blockchains, the likes of Solana, Polygon, and Algo would also show some upside. And not also forgetting BNB, because you need to understand that despite the fact Ethereum happens to capture the larger market share in NFTs, the rising gas fees has really hampered the momentum across spectrum. So we think the penalty is also gaining ground. And I think investors are also looking at reuse case altcoins in the month of November.
All right, and we see Facebook there rebranding to Metaverse, and some crypto tokens also in that Metaverse range doing some crazy gains yesterday. We saw that happen. Anyway, Olumide, thank you so much. Always good to talk to you.
Yeah, thanks, man. Yeah.
All right, let's look at what's on my radar now. On my radar, I have a PSI, that's passive income token, priced at $212 right now. PSI is an innovative blockchain token for those who like to earn passive income with crypto, because some of these cryptocurrencies, you can actually earn passive income if you don't want to trade on the spot or futures trading. So you can just buy and hold and stake your coins to earn more USDT or Bitcoin. Market cap is 3.86 million. Price is $212 this morning, and it's just 50,000 tokens. So this price could be a steal right now in this market. Top 5 gainers, we have Loopring there, leading chart there, 39% up. Hot Holochain up 19%, and we have Qtom there, and XDC. Top losers, you have the Metaverse tokens having pullbacks there. So, Chime, it's quite a bullish market, but right now people are kind of careful this week to see if Bitcoin might actually pull back.
I see. And while we watch the PSI that you talked about, let's just hope that the month of November brings good tidings to investors.
Exactly.
Okay, that's a wrap on the program. Thank you for watching, and don't forget to join us by 1:30 this afternoon on Business Incorporated for more updates on developments in the world of business. I'm Chimeze Obi Iwagu. Thanks for watching.